Welcome, everybody. Today is Wednesday, January 19th, and the big question is, when does the selling stop? It's like, seriously, it's been going on for the start of the year. Like, what are we doing here? I don't think it's going to stop, but I'm going to give you some ideas today in my market update, and you tell me what you think, because this is just crazy. Like, we saw some signs last week, and I'll get into the chart in a second, but we saw some signs last week where it looked like the market was going to pull back and then bounce back up. And that was just laid to bed this week because it's been a nonstop parade of sell, 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 sell. So let's get into the chart and tell you what I'm looking at. Right here, we've got the S&P 500, the SPY. Okay, and last week I thought, yeah, things don't look too bad. We're right here. We're doing okay. We got two candles in a row. We're going to make a break for this. And then we had this third doji here, an indecision candle. I thought, okay, that's fine. Maybe we come back down here, but I think we're over this. Nope. So wrong. Couldn't be more wrong. We are in the thick of it again, in the sticks. We're going down, down, down. I can't remember the Fall Out Boy lyric, but it's in that song. Sugar, we're going down. We're heading steep decline. We might hit this 200-day moving average right here, which is around the 440 mark. There is some support right here on the 450 mark as well, which I like. I like it to kind of stop and peak there. See how it did that back in December, kind of peaked here. If we can stay and catch here, I think there's a good chance we'll bounce back up. But for now, we just got to be prepared for the worst and just keep on keeping on. If you're a bearish trader, that's good for you. If you're bullish like I am, you're waiting for the rebound, sitting on your hands. VIX is also spiking. Volatility index is spiking, okay? And it's inverse of the market. So when the market goes down, VIX goes up because there's more risk, more uncertainty, more volatility in the market. And right now it's just humming full of volatility. And we're not back to these levels again in December, but we're spiking up there. Anything on top of 20 is like an elevated VIX. Back in COVID days, right when it hit, we went all the way to like 85 or something. I can't even get on the chart. It's so much higher. But VIX likes to come back, likes to hang around 16. So it naturally wants to go down, but when these volatility spikes hit, it does have a chance to spike back up. So we'll see how that plays out. The other thing to mention today, earnings are coming up, and Microsoft purchased Activision Blizzard, which I went through yesterday in the video. It had a great start to the day, shot right up there, and then boom, back down to earth. So we'll see what happens with Microsoft. That's a pretty menacing candle because it means the buyers tried to move higher. They couldn't sustain. The sellers took over and closed the day a little bit lower than open. We will see what that happens and what that brings. It's getting close to the 200-day moving average, so it's getting beat down. I've got an alert set for 282 around there, which is support back in October again. See what happens, but honestly, for the most part, this market's just really choppy. A lot of decisions looming from the Fed, the interest rate hikes, and the bonds market going up. The 10-year yield in the U.S. bonds are impacting things greater than they should be, in my opinion, and we're waiting on some earnings. See what happens. Hopefully next week is better. We got Apple, Microsoft, I think next week. Facebook soon after. Amazon soon after that. So hopefully there's good earnings. It picks things up. But that remains to be seen. We'll see what happens later this week. Closing things out tomorrow on Friday. Other than that, thanks for checking in. I'll see you guys on the next one.